Today, we're at Consensus 2023, where Coinbase's chief legal officer explains the company's response to the SEC's warning of impending enforcement action. And Mastercard's head of crypto breaks down his blockchain vision and a new set of standards that will help authenticate interactions using the technology. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos, on the ground at Consensus 2023 in Austin, Texas. Let's start with talking about the crypto market, though. Digital currencies are flat to close out the week, with Bitcoin trading at around $29,000, Ether dipping to the $1,800 level, and Polygon trading at around 99 cents. The past week has been mixed for crypto. Bitcoin rose nearly 4%, while Ether dipped about 1%. Okay, let's jump right to our coverage at Consensus. Lots of big names in crypto and finance are making major announcements here in Austin. Crypto World's Talia Kaplan spoke with Raj Dhamodharan, Mastercard's head of crypto, about the payment giant's latest move in the space. Today, the world's second largest payments processor revealed what's called Mastercard Crypto Credential, which establishes a set of standards and infrastructure that the company says will help certify interactions among consumers and businesses using blockchain networks.
Thank you very much for joining us here at Consensus.
Thank you very much for having me.
Absolutely. And here you're actually making a big announcement as it relates to trust with blockchain transactions. Now, this is something you often preach. It's very important to you. Why did you feel it was absolutely necessary and something you wanted to announce particularly here at Consensus 2023?
Yeah, trust is everything because what you're finding in blockchain and crypto today is that the number of institutions that failed, and there is generally a lack of clarity on what is a compliant way to use the technology and what is a non-compliant way to use the technology. So what we think the crypto credential will bring is set of standards and enabling technologies behind the scenes, then people know who the counterparty that they're interacting with. I'll give you a simple example. Today we are announcing a set of partners who are enabling cross-border transfers between US and LAC. There, you need to know who the counterparty is. Can you exchange necessary information to build trust to make sure that the transaction would be successful when they post the transaction onto the blockchain? Ultimately, we want financial institutions, governments, and other regulated players to build solutions onto the public blockchain. You can only do that if you have a trustable, verifiable way to post transactions onto the network. We think we can help. We're working with a number of partners to do that, and we hope more use cases will emerge out of this as well.
Can you disclose some of those partners on this project called Mastercard Crypto Credential?
Yeah, we have a number of wallet partners, Uphold, Ethereum, Bit2Me, Mercado Bitcoin, and we also have, what is interesting about this is that all of this gets built in some public blockchain. We see a number of the public blockchain networks joining us in this announcement as well. That includes Polygon, Solana networks, Aptos, Avalabs, and so forth. So this is just a starting point. We think each of those blockchains will bring a set of developers into this who uses this framework, where we can all build solutions that are verifiable, trustable, safe, and simple to use. And ultimately, that's how we scale this ecosystem.
Now, Mastercard Crypto Credential, which is going to be revealed here at Consensus, has the ability to unlock different use cases, including those involving crypto wallet transactions, I understand. Can you take us through that use case and others that this potentially brings about?
Absolutely. There are a number of use cases, right? I'll give an example of our own Artist Accelerator that we launched a couple of weeks ago. That is about providing an NFT to a consumer, a music pass to a consumer that unlocks a really exclusive experience. The level of verification and standard that you need to do, that is different from the level of verification you need to do to a wallet holder before you issue a card. And that yet is completely different from what kind of verification you need to do to enable a cross-border remittance transaction. So the levels of verification vary, and we bring different partners and standards to enable these use cases. These are just the sample use cases that we're starting with. Ultimately, if you want to have scalable, trusted applications to be built on public blockchains, we think this is a key building block before you can take that step.
Now, obviously, right now we're in a bear market and crypto prices are depressed, consumer confidence is down. Crypto took a beating this past year. There's no doubt about that. And yet, MasterCard is investing heavily in the space. Is that part of MasterCard's strategy? Are you trying to build now to get ready for the next bull run, perhaps?
So there are two sides to crypto, meaning that there is an investment, people buy and hold crypto, and people make that choice, and if they want to do that, we have no recommendation on whether they do one thing or the other. But what I'm really excited about is that the underlying technology and the power of that technology to help build a new set of financial applications on top of the underlying technology. That's what we're focused on. If the consumer wants to buy crypto or sell crypto, we want to provide safe way for people to use through MasterCard cards. So we do that. We have on-ramp services to go from fiat to crypto, and for them to use MasterCard cards to spend. We don't move crypto in that process, but we make it very safe and easy for people to do through our partners. But what I'm really excited about is the next click of this, which is really the underlying technology and how it can help us build the next set of financial applications on top of this infrastructure.
Now, even though we're in this downturn, you made many recent announcements, including 2 in October. One of those was called Crypto Source, and it's aimed at making things smoother between banks and crypto investors. And the other is called Crypto Secure, with the goal of making it easier and safer to buy crypto. So can you take us through those, and how is it going so far?
Yeah, no, so Crypto Source is really, again, about today we have centralized exchanges that are providing buy, sell, hold crypto. But we see traditional financial institutions also interested in participating in this use case, especially outside US. So that's why we made a Crypto Source product available. And the Crypto Secure is really about helping financial institutions understand the other side of the players, the crypto players that they're dealing with, so that they can make transaction decisions using the risk scores that we provide. Ultimately, once you understand the space more, you can trust the space more. Once you are able to know what is a risky transaction versus not so risky transaction, you engage more. Ultimately, this kind of visibility and services provide the trust that is needed for more players to participate in this network.
Now, I spoke with an analyst here on the ground at Consensus, and he told me something that he's noticing is the fact that there aren't a lot of TradFi companies here at Consensus this year, especially compared to last year. And yet MasterCard is here, you're making a presence. What prompted you to want to come here and be here on the ground amid all these crypto enthusiasts and different companies who are investing in the space?
I think we fundamentally believe this technology has the potential to build a new set of financial applications. And we think we can only do that working with the partners in industry that is innovating in this space. Part of the reason we have a Crypto Start Path program is to bring those early stage startups, to work with them, to understand the technology, also help them scale using the power of our network. And we can only do that by working in places like this.
All right, for our main story, I caught up with Coinbase's chief legal officer, Paul Grewal, here at Consensus yesterday, just moments after the company released its response to the SEC. Last month, the regulator sent the crypto exchange a Wells notice, which is a warning that Coinbase could face impending legal action over its business. In Coinbase's response, the company pointed out that it had been in touch with the SEC several times and that the regulator failed to raise concerns over its business model before it went public. I asked Grewal about that response and the likelihood that Coinbase could face a lengthy legal battle with the agency. Not a lot of companies are this transparent about the Wells notice process. Why has Coinbase taken a different approach here?
Well, for Coinbase, being transparent is kind of part of who we are and how we've operated for over a decade as a company. When we first received the Wells notice from the SEC, we thought it was important to share that notice so that people could decide for themselves whether the SEC's concerns as expressed were clear and specific or not. And we think, having reviewed that notice for themselves, most people have reached the conclusion that the SEC has not been clear, it has not been specific. And so for us to share our response to that notice, for us to share the video that we submitted as part of that, and for us to talk about that in settings like this, we think is just very consistent with who we are and how we operate.
And what are the big takeaways from your response to the Wells notice that just came out less than an hour ago?
Yeah, so the main point that we emphasized in the Wells notice response is that Coinbase has operated in plain sight, and at the specific direction of the SEC for years now. We were a public company as of April of 2021. In order to become a public company, we had to submit a detailed draft registration statement, an S1, with all sorts of disclosures about how we operate, how we review digital assets, how do we make sure that digital asset securities are not listed on our platform, given the current state of the law in the United States. And after that entire exhaustive examination, the SEC ultimately concluded it was appropriate for us to list as a public company and allowed us to do so. So we think that the fact that our company largely operates as it did back then, today, we think the fact that the SEC over that period of time has had multiple opportunities to raise concerns or questions that we could address and answer, and has yet chosen not to do so. We think all of that suggests that any charge or case against Coinbase is less about keeping investors safe and more about establishing jurisdiction or claiming turf in a way that we don't think is productive for the American investors.
And has anything appreciable changed in your business model since you had to go through that exhaustive set of requirements to list in April 2021?
Products and services are always changing, but the fundamental model remains the same. We review every asset, every product and service to make sure that we comply with the federal securities law, period, end stop. We do that according to a process that we shared in April 2021 with the SEC. We've continued to apply that process even as we refined it all the way up into the present day. And given the state of the law, we are confident that we have avoided any serious claim that we have violated those laws in derogation of our obligation and responsibility as a public company. That has not changed.
And you've met with Chair Gensler over 30 times in the last year. How have that?
Not with the chair specifically, he's a busy man, but we have had over 30 separate engagements with the SEC staff over that period of time.
What have those conversations been like? What has the tone been from this?
Well, to be very clear, the tone is always professional and even at times cordial. We have a lot of respect for the professionals at the SEC who have worked in many cases for years and in some cases decades to try to keep American markets safe and protected. I have a lot of respect for that personally. However, every single time we have attempted to raise concerns, whether publicly in the form of our petition for rulemaking that we filed last July, or privately, as in conversations that began last September in an attempt to get to a definition of a national security exchange that could work for crypto and in a way that would allow cryptocurrency exchanges like Coinbase to come inside of the SEC regulatory perimeter, we've ultimately been met with silence on the one hand and a threat of litigation in the form of the Wells notice on the other. So I can't say that they've been terribly productive, even as we've continued to plug away to try to make our case for why regulation in this industry makes sense.
So there's been a lot of back and forth this week between the Coinbase and the SEC, starting with the suit that was filed on Monday. Today, you issued your response to the Wells notice. We also heard from Chair Gensler, who in a video statement posted to Twitter kind of doubled down on the fact that these rules and these frameworks have been around for 90 years, and so there isn't even a question of whether or not it applies. Do you have any response to that new statement from Gensler today, kind of doubling down on past?
Well, it's a curious statement to make that the rules are clear and that the SEC's authority is undeniable, when the chair himself, in May of 2021, the very next month after we were allowed to become a public company, declared in testimony to Congress, not just in some interview or in some tweet, but in congressional testimony, that there is no market regulator applicable to cryptocurrency exchanges like ours. He then doubled down the very next day in saying that Congress has not set forth any federal authority that would allow the SEC or any other regulatory agency to exercise jurisdiction over companies like ours. And so for someone today to make a statement that somehow this authority is clear when just 2 years ago they said exactly the opposite, well, I'll let you and anyone else reach their own conclusions about how sincere that statement really is.
And what happens next? Like, what does the runway look like for this exchange with the SEC, with Coinbase's approach? What are we looking at in 2023?
Well, we have, unfortunately, it looks like a lot of time will be spent in court addressing a number of these issues. You mentioned our petition that we filed earlier this week asking the Third Circuit Court of Appeals to order the SEC to respond to our petition. We think getting a simple yes or no answer is entirely reasonable when our question is simply requests nothing more than that. So I think that we're going to be in court on that for a while. I'm always optimistic that cooler heads will prevail and that we can turn away from regulation by enforcement and leaving it to a judge or a jury of citizens to decide these questions, and instead have a notice and comment rulemaking process that allows all interested participants to have a say. I'm always an optimist, but I'm also a realist, and so if going to court is required to get the clarity we need, going to court is what we're prepared to do.
So last question, Brian Armstrong has mentioned that the company is open to potentially shifting operations outside the US if you don't ultimately get the clarity that you're looking for from regulators. Is there a deadline on this? How realistic an outcome
Well,
is
what
that?
Brian emphasizes that all options are on the table. And of course, that's always the case when you run an international business like ours. Even today, roughly 20% of our revenue comes from outside the United States. So we operate today as a global business. As we continue to consider where our greatest opportunities lie to bring crypto to not just hundreds of millions of people, but potentially billions of people all over the world, we have to think about what opportunities may exist for us in other markets outside of the United States where the regulatory climate is more balanced and where governments have recognized that crypto is here to stay and it's time to implement reasonable rules that will keep everybody safe.
A lot of people are talking about the UK as being an ideal jurisdiction and wanting to shift operations
We have
there.
a lot of respect for the UK, and to be very clear, they are not soft when it comes to regulation. They have very strict standards, they have capable regulators. It's no walk in the park to operate a business in that particular country. But they also recognize that it is just as important to have clear rules, it is just as important to be welcoming of industry as it is to simply rely upon enforcement actions in order to establish some type of jurisdiction.
Okay, one last thing before we go. We also spoke with Robinhood's crypto general manager, Johan Kabrat, at Consensus shortly after he announced a new feature the company rolled out called Robinhood Connect. He explains to us how it works.
We are happy to launch our new on-ramp from fiat to crypto, and it's a big commitment for us to show that we strongly believe that Web3 interest is remaining strong and we are going to keep investing in this space. Robinhood Connect is basically going to be a low-cost fiat to crypto on-ramp where developers can implement Robinhood Connect within their dApps or within their wallet, and customer will be able to fund their wallet without leaving the dApp or anything like this, and they will be able to fund their app with our low-cost on-ramp.
We'll have a lot more from that interview with Johan, including how Robinhood makes money on its crypto services on Monday. So be sure to catch us then.